right, how we doing, guys? Sam here with you on Thursday, September 27th. Now, as it's a Thursday, we look at traditional assets here, and we did a little polling amongst the members and had a request for the dollar index. We're also going to look at the S&P 500. So here, I always like to go to currencies here because they're so technical. I'm always surprised we don't get more views here, because what I'm going to show you here, it just reinforces what I try to teach you, is that when you're trading in any of the foreign exchange markets with any of the currencies, these are extremely long-term trades. All right, so the idea is to try and get yourself positioned into something, one of these, where you can catch one of these technical pivots and make the turn and then stay in the ride. So just for example, this is the 2001 high that goes for 7 years. Right, 7 years. That is, yeah, I know. You think it goes, geez, no way you could stay long for that length of time. Yeah, I'm not saying that I could. I'm just trying to demonstrate the value of getting yourself in one of these pivots here, one of these technical terms on the longer term chart. Can be. I mean, that is. People retire off of that. So you can see it. So it looks like what we have, and this is all the data I have. Now I'm on a 3-day chart. So it looks like we get an A, B, we finish into a C. So we've got our little 3-wave structure. Have a nice, it ends up being an impulse here. The extension is in the 1, 2, and you can, so you go, oh, come on, man, no way, not on the 3-day chart. It's not going to be technical, right? So that's to the tick. Right, 50% to the tick. There's a little reaction, first target, second target. So that's 98. We end up peaking up here. Even if you took the second target, that's a 2-year move. And again, you look at it and you think, well, there's no way it's technical. I mean, this is where it's most technical, is the longer term. Right, so I just try and make that point, so you guys, trying to drive that home here. I think a lot of people they go, shit, man, I can't stay in a trade that long. Well, again, I'm not saying that I could either. I'm just trying to demonstrate to you that the point of looking at foreign exchange and working through this on the longer time frame is so you could get yourself positioned even for something like this. That's 05. That's a 3-year move, right? So if I take that 2, you go, oh, come on, man, no way it's technical. There's just no way on a 3-day chart it's going to be technical. 2 to the 3, where are we looking for the 4? Between the 23 and the 38. All right, that's to the tick, right? So you look at that and you go, oh, where are we looking for the 4? Where's our target? What happens at the target? So it just... Right. I mean, all I try and do here is just put evidence in front of you guys and let you all draw your own conclusions. Right? I don't know how you can argue with that. So all right. So we look at that and we say, okay, I've got 5 coming down. So let's get over here to what matters now. We've got 5 coming down. All right. I know I'm looking for 3 to correct that. Right. We have an 8-year trend in perfect 5-wave impulsive structure. So I know I'm looking for 3 to correct that. So it would appear that I get an A, B, C. This is perfect symmetry here. This is something to look for in this kind of a correction. You can almost see it just looking at it. Right? So length of A projected from the B, it's almost to the tick at 100% parity. So it looks like we go A, B, C, and then we get this very clear impulse, right? We get a little leading diagonal in the 1, down for the 2. So you look and you go, I wonder what that 2 looks like if that was technical off of this low. So we go up here and you think, oh, come on, man, not on the 3-day chart. It wouldn't be technical on the 3-day chart. Well, there's a couple of tick front run on the 50, first target, second target, third, fourth target. All right, so when's the buy here? That's May of 2014. Pivots, that's a 3-year move. Is it technical, right? I mean, anybody could sit there and go, hey, there, I got a 50 happening long term. Looks like I could be a buyer there. Were you ever threatened? Was there ever any retracement that made you nervous? It's essentially straight up. Straight up. All right, so let's think about where it would put us. So so we just standard ops here. So we'd wick off the 1 wave. We'd look at the 2. We'd look for a relationship between the 2 and the 4. So I'm just going to grab my 2 up to my 3. Where are we looking for the 4? Between the 23 and the 38. It's right to the 38, right to the Vegas wave, up. Now we get a little short of target. Front run, maybe. More likely they ran into the move on the way back. So we look here to here. What do we? Oh, they got through just by a couple of ticks. So, you know, as the dollar index is a basket of other currencies, boy, you know, I would allow for that. Given the reaction here, that's a high probability that's algorithmic selling there. So it almost looks like they ran into this. They couldn't get to target. So thus, you know, maybe it's a push to try and get to target, but the algorithms that were sellers there overwhelm it and take it down. So we get this reaction. So we can look at that and say, well, if that's going to be technical, this algo here has a target down here at 57, and you think, shit, man, is that possible? The dollar index going to 57? That's not what I'm proposing. I'm just showing you that that's a technical trade. There's an algorithm that was sold there that will stay short until they get that. They will. Right? So, of course, there will always be a competing algorithm on the other way back. So you look at this and you go, huh, that's kind of interesting. It looks like I can get a very clear 1, 2, 3, 4, 5. So coming off of this, that sure looks like either that's an A wave or that's a 1 wave. Right? And it's hard to call it. So I have just by default here, but this could very easily be the 1 and the 2 going in for the 3, 4, and the 5 to take us down here, because we've had 5 down. We've had an ABC corrected to 3. Yes, it went through by just a couple of ticks. We get through the 65, but now we've had this reaction. So 5 down. Here's the correction, right? So here's the A, the B, up to the C, right? So that's correcting this 5, A, B, C. Down we go. We go right up to the golden zone. Now, what are we anticipating next? Well, we're either going to get another ABC. We go into some sort of complexity. Right, which is why so the alternate is that you'd have some sort of a combination here. So we get ABC, could get ABC again. We don't know. We just know that we have 5 down after an ABC has completed. So, you know, it's a 1 or an A, right? So it almost doesn't matter here because we're going to be able to determine what happens. Do we get a 3, do we get a 4, 5, or do we just get an ABC? So you look at this and you think, okay, well, I'm not sure what it is. I can't define, but just based off of this pattern, 5 followed by 3, the next thing most likely, most probable, is that we'd have a 5-wave motive wave coming off of this 3. So a little bit you look at that and you go, huh, I wonder why it stops there. Well, of course, as I will remind you that there's always an algo on the way back. There's always an algo on the other side. So you think, not quite there. What about this low? Right, so it's always a little bit of a hunt going, okay, what did the algorithms use? What did they do last? Well, here's the start of our C wave. This is where I start this leading diagonal into this 1, so I certainly want to check that. Well, that's to the tick, right? So they've got this. So then you look at that and you think, okay, well, if that were to hold, maybe I have this wrong. Maybe this third, maybe this is, maybe we have a truncation here. Maybe this is A, B, and then we have some sort of a truncation in this C wave here. Possible, right? So how would we know? Well, if this is gonna continue to move higher, we're gonna take out this pivot. Well, now we know we've got something else happening, because then rather than the 3 wave we had before, so this is what we had on the assumption that the correction is in and that's the C wave. Well, if we come down here and do that, right? So let me double click to get rid of that. All right, well, then what do we have? Then we have a 1, 2, 3, 4. Now, note here, we would have overlapped. So here's the, if we were going to play this as, if this were going to be 1, 2, 3, we've just barely overlapped it here. So we'd have to have a diagonal, which doesn't fit as well. Well, it's possible, right? It's certainly possible, right? So we look at that and you go, all right, well, I'd have to count this as, we'd have to count this, so we'd have to have A, B, C into that, because we'd be looking for a 3-wave structure, which we could probably make that work. Then coming down here, then now you've had an A wave into this low. So I think this is less likely, which is why I don't have that as my primary count. I think this is more likely here, that we've completed this ABC. This is technical, right? So an algo, just going to use a dominant pivot, right? These pivots are, that's 08 to 011. Those are 4 years apart, 4 years distance. So certainly this is a dominant pivot, and it's the start of this motive wave. right, of this impulsive structure. So it's certainly reasonable to check this. The fact that I see that reaction there, well, again, you know, so let's go down to the to the daily here and look at this. Well, I can certainly see a good clean 5 coming down here. So I can get my 1, 2, 3, 4, 5. Let me move this down here. We'll change that. Let's get that in white. We'll take this up a degree. Bear with me a sec so it makes sense. Okay, so there we go. So we have 1, 2, 3, 4, 5 right into the 50. Now we're getting a reaction. Well, this reaction looks like it's... Boy, that bugs me. Okay, this reaction looks like I've got 5 waves in that. So this looks more to me like I've got an A wave. So I can go 1, 2, 3, 4. Looks like a diagonal. That looks like A. B coming in, C yet to come. Right? Remember the length of time. I'm on a daily chart here. So we look at this and go, huh, wonder where we are here. Wonder why that stops there. Well, here's my A wave. If I'm retracing, well, let's see. I'm going to take this one off. All right, so I've come between the 50 and the 618. That's not a bad target for a B wave, but because of that, let me see, I'll go to the 4 hour here and we can dig this out a little bit better. Because I have, this is a little sloppy, I'm gonna take this off or hide it. All right, so this looks like 1, 2, 1, 2, 3, 4, and then 1, 2, 3. Can we get a diagonal out of there? Well, we can get an A, B, C. So it looks like this is more likely the A wave here. So we'd be anticipating off of this pivot down here, we'd be anticipating the B wave to kick in down here between the 50 and the 618. Let me tighten this up just a hair. All right, so it looks like I've got 1, 2, 3, 4, 5 to get me up there. There's my A wave. So I'm gonna go back. Let's go to the 8 hour. So if we're trying to put a roadmap together, this would appear very, very probable that we've got one more push up here. This would put us in the golden zone, but here we've got our algo target. So somewhere up in this range is where we'd be looking for that C wave. Now let's put that, I guess so we can see that a little better. And we'll go to yellow on that. So that looks like a very real contender since I've got 5 coming down and it would appear I've got 5 going up. So I'd be looking for the B wave down here between the 50 and the 618. So we look at this and you think, okay, well, wait a minute now. So the Fed says they're raising rates. Well, isn't that bullish for the dollar? Well, you know, here's the response to that. Yeah, it's bullish for the dollar. Get this off here. So, you know, but again, I promise you, if you try and outthink the market, that's... You know, unless you make your living as a fundamental analyst, I would encourage you to be careful with that because the market will almost always do the opposite of what you think is most likely. So I would tell you, right, I'm not trying to discourage you from fundamental research. I'm trying to tell you that if you're a fundamental analyst and that's what you specialize in, first question, why are you watching this video? If you're a technician, the technician's assumption is that all of the known technicals that can be known at this moment in time are factored into that price right there. So that's the technician's assumption, that you have to either lean into it or you don't, right? So we can just, you know, collectively think to ourselves, well, interest rates increasing should be bullish for the dollar, yet what's our reaction today? We're selling off. So it's never quite that black and white. I wish it was, or it would be easy. Oh, interest rates going up, we buy the currency. Interest rates going down, we sell the currency. That's yeah, in the very longest term, that ultimately will likely be the way the market moves. But in these, as a trader, we're just looking for technical confluence. Right, we'll let the fundamental analysts work it out. What can I see? I can see that I've done a 50. I can see I've got a 5 wave down. I can see I've got a contender here for an A wave. Right, so I've got a potential roadmap here that would set this up, right, for a 2 wave up here. Let's take that up a degree or two. Let's go to minuet. Okay, so that would set me up as a potential 2 wave here, which implies we're going to continue. So this perhaps this is just the reaction. So yesterday's the Fed meeting, right? They talk about a gradual raise of rates, right? And what's the reaction today? We're coming down. So again, doing the opposite of what you'd think would be logical. So if we're going to come down, we're going to test this 50. We got to pay attention there, right? We know the 50, right? So we're just trying to get on board of an algo. So we have one algo that's sold here. right? Dominant pivot to dominant pivot low. So we know an algorithm's kicked in here to starting to sell. They will stay short until they get to the other side of this 65. If it gets to the other side of that 65, assuming we have a pivot here, then they'll take the next 50. So that will look like this. That would come here. So that will come down here to this 50 with this as the target. Well, if we get that, well, then we don't have a 3-wave. We've got 5-wave structure, so we might have to reconsider the way we're labeling this. But right now, this seems to be the most probable with this outcome, right? That would be the target there. So if this were going to finish here, do this without moving it. If we're going to get our ABC to finish here, right? So we're looking for down to the 50, up to the target. That completes the 3-wave correction, excuse me. Completes the 3-wave correction of this 5 down, but it sets up this target down here. Right? You go, hey, wow, 86.69. That seems low for the dollar. Well, again, I'm not making a prognostication. I'm just telling you where the software will kick in. They're going to sell that. They don't give a shit how low it is relative to where it's been. That's just right. There's no guide. There's nobody sitting there going, I don't know, man. That seems like awfully far down for the dollar, and interest rates are going up. How's that going to happen? Well, number one, right? This is going out into 2020, right? So we got plenty of time for Fed policy to affect this, right, in the longer term. But right now, they're raising rates. So that would suggest that this sets up here as a potential B wave into the C. Again, that's a huge move. I'm not saying not to trade that and wait for the short. I absolutely would look long and hard at this. I'm not one who typically trades the Dixie. I'd be more likely to trade the euro or the yen than the Dixie futures. But just again, this is a good way to get a read on where the dollar is going and then consider it relative to those other currencies. So we have this nice path here that sets up. Again, we don't know if this stops here. This could easily go down. Let me take that off. This could easily go down to the 618, could go lower. Remember, it's a B wave, so anywhere from the 50 to 786. But this is our most probable range. This is where we're looking for it. So if this comes down here and we can get this in a nice 3-wave, remember this is a B wave, so we're looking for something like that. All right, and we'd be looking for this in some sort of a 5-wave structure to get us up there. All right, so if we can find that kind of subdivision here, it just adds credibility. So then we get the combination of, so first off, what did the algos do, right? Well, we know one sold here. We know one will start buying here. So can we get on board with an algo that fits with the larger degree count? If we can, then that's a must take. Now, what else could be there? Well, again, depends on where this is going to go, but we certainly have this possibility if we pivot here. So look what that does to here, where that puts our target. Right? So again, if this were to come down, I do not know. This is hypothetical. I don't know where that pivots, but if we were to pivot in this high probability zone, we certainly then have a potential corner pocket setting up. So if we pivot down here, as I've said, God knows how many videos, because I don't want you guys to miss these. So if we come down here and pivot, you got a corner pocket. It means 80% probability of making the median line if this pivot holds. I had someone ask yesterday about what that means if that pivot holds. I'm not sure how more clear I can say that. What I'm saying is if the market were to start to come down, let's see if I can get something hot here. If the market were to come from this pivot and come down here and break that pivot, well, then we kill the corner pocket. Now, that doesn't mean that this couldn't go lower, right? Those same odds apply down here. You just have a new pivot that you're working from. So when you're thinking about a corner pocket, right, at some point you have to make a stance based on a pivot, right? So whether it's at the 50 or the 6-1 golden zone or the 786 or even deeper, at some point you've got to say, okay, that's the pivot. So maybe it's this ABC brings us down to the 786 and we go, oh man, that's got perfect parity. I've got all the subdivision that I'm looking for. I've got the length of the A and the B. We've got perfect parity. The C equals the length of the A. Probably be a little closer to that. So we have ABC, perfect technical confluence. We've got pattern, price. I put a pitchfork on it. If that pivot holds, you have 80% probability of getting to the median line. Now, it could go here. It could go here. You don't know when. It could go here. But that 80% holds as long as this pivot holds. That's the only pivot that matters, right? So these don't matter. This is the pivot that matters. Right? But remember, we've also got one going the other way. Right? So we can look at this and go, oh, okay, what about that? right? Doesn't this have 80% probability? It absolutely does. Yes, it does. Let's get that. That's not what I want. Let me clear some of this up so you get the point I'm trying to make. Just like there's always an algo. So the algorithms are written to there will be a series of algorithms always going to follow this footprint, but there are also algorithms that will work off of this market geometry, as I've demonstrated it many times. So let's say we come down here and we get a golden corner pocket. All right, so you have to put this in context because wait a minute. Doesn't this have just as much probability of getting to the median line? Here. We don't know when. It absolutely does. So there's your conundrum. What do you do about that? Well, so if you're just working off of algos, you're always going to find yourself between two algos, always. Well, pardon me. That's not true. If we take out this 65 here, then we don't have an algo on the buy side. Right? That would increase the probability that if we break here, we're going to get to the median line. Right? Again, it doesn't have to be at the algo target. That just happens to be somewhat coincidental. We could go from here. We could go straight down. Some crazy shit happens. We could go right here, right here. Nothing says it has to be at the algo target. That just happens to be a place where we can look and go, oh, well, that would make sense. Well, if we did that, if this were 1, 2, and we came down here and hit this algo target, well, doesn't look like that would be long enough to be a 3. So maybe that's just the, again, it's not likely to go straight. So depending on that subdivision, so you might look at that and say, well, would that make sense? If I went from this B here, well, I wouldn't even be 100%, right? Here's 100% the length of this one wave. So too short to be a third, excuse me, too short to be a third relative to the 1. Right, now remember, third doesn't have to be the longest, just can't be the shortest because since we don't have a 4 or 5 to compare, the only thing we can compare to is the 1. So here's 100% of the 1. If this were going to trade as 1, 2, and we were going to get a 3, we got to at least go 100% of the 1. So if we were to bounce here, that would be wildly bearish because that would suggest that that was just the 1 wave before the 2, 3, and 4, or the 2, 3, 4, and 5 are all still yet to come. So I just want to be clear about that. So you have conflicting algos here and conflicting median lines. You're almost always going to have that, except in that rare instance here, and of course it will always be a function of the time frame that you're looking at, is I sit here on an 8-hour, this is my low. All right, so from swing high to swing low, I still have the potential of an internal retracement here. Holding above this 65 so that I can get that algorithm that will have a target of this pivot right here, this green line, will have that target right there. There's the algo footprint, right? But I've got the exact same thing happening here, right? So it's, let's use this. So it's from here, right? So here's the pivot, here's the low. We went through the 50, but we're between the 50 and the 618. That has this target. Right, so you have both of those competing forces in the market. How do you pick? How do you know? Well, that's where the Elliott Wave can be incredibly helpful to us. We just had a 5. What do we anticipate? What's most probable next? Right, it's the 3. So if we accept the basic tenet of Elliott Wave, the foundation of the principle is that markets trend in 5s, they correct in 3s. If you can't take that on board to your thinking, then you have no business trading Elliott Wave because all it's going to be is it's just a constant source of contradiction. So you have to at least embrace that. You can, just as I could put millions of charts in front of you demonstrating that, I'm sure you could find plenty of charts showing it breaking down. It's not, the point is not that it's always in the market. The point is that when we can see it and when we can identify it, we can use it to our advantage to increase probable outcomes. Well, let me rephrase that. To increase our ability to identify probable pivots and probable targets based on that fib relationship between those swings. That's ultimately what it comes down to. So if you're not buying into that, then you got to think, okay, well, all right, I'm just going to be an algo and I'm just going to trade algos and pitchforks. Okay, well, that's, I'm not saying that's a bad idea, but there are times where adding just that basic understanding of Elliott Wave will absolutely be helpful to you. You don't have to be a master Elliotician. You just have to embrace this idea. Okay, well, there's a 5. So first identify it. Can you identify it? It's not that hard. All right, 1, 2, 3, 4, 5. Here I've got 3 waves correcting that. So we trend in 5s, we correct in 3s. So what's more probable here? This, boy, it's hard to call this the correction of that. So I've got 5 down. This just looks much more like 5 than it does. Yeah, I could probably call this A, B, and some sort of extended C, but that symmetry is wrong. It doesn't fit. So what's much more probable is that after identifying that 5, I'm looking for 3. So this having done a 5 implies the A wave of the 3. This now pushing off of this, right? Now, if this breaks down, let's get that out of there. Let's get this arrow. If this breaks down, let's get it out of here. And this algo wins the day. So bears win, and we go down to this target. Well, that's a bit of a problem for us. So because this is the problem area, because how are we getting that into a 3-wave structure? Right, I'm on an 8-hour. Let's go to the 3-hour, see if that looks any better. Is there any way I can dig a 3-wave correction out of this? Boy, it's sure just looking at it. So just first blush, just 1, 2, sure looks like there's 3, 4, 5 going up. Let's move that up here. Right, so again, so now you look at that and you go, oh, shit. Now you look at it and you go 5 followed by 5. Wait a minute, Sam. You're telling me that 5s are followed by 3s. Well, that's right. That's right, but we're looking at the subdivision. We know the most common retracement, the most common Elliott retracement is a zigzag, 5, 3, 5. So far, we're right on track for a zigzag because I've got a 5 here, which implies the A wave. Again, it doesn't guarantee anything. It implies it. 5 followed by 5. Most probable way to label that is as an A wave. So here we come down. So we're looking for the B, then we're looking for the C. So right now, we're looking for 5, 3, 5. That's what we're looking for. And this already looks like I've got an A, B, C, maybe it could be 1, 2, 3, 4, 5. So it could be I've already got the makings of the A wave. Remember this. Potentially, let's take that down. Let me get that to white. So this is where it gets a little tricky to follow. Okay, so then you look at that and you say, well, wait a minute, man. You're telling me 5s are followed by 3s. But remember, this B wave, right? Because the B wave is correcting the A wave. Here, let me get this shit off of here. This is because I want you to understand this. Okay, let's get this off of here. All this. Okay, so so we say we look at this and we say, okay, we had 5 coming down. Well, shit, man, I got 5 going up. What's going on? I thought it was 5s and 3s. Well, this B wave here, and again, it could be here, could be here, could be here. We don't know where that is. We just know this is the most probable location for that B wave. That's all we know, right? We know golden zone. We want it to hold golden zone because then the algorithm that's going to buy here with this as their target, we're looking for this. We're looking for this to that. That's what we're looking for. We're looking to get on board because we know, just like we know an algorithm sold here at the 50, that an algorithm they'll start buying at the 50. They'll defend to the 618. We like this better. So it doesn't necessarily have to be better, but if we look at where this is going. So right now, this looks like I've got a 1, 2, 3, 4. Again, I don't know. Could be A, B, C. Right, it would be a shallow C. Looks like the 1 is the longest, but this could be A, B, C. A, B, C. This looks like that could be 5. But this could be, well, until we take out this 2, right? We've got to allow for the possibility, because we've already taken out the 1, that we have a leading diagonal, which we can allow for in a 1 and a 5 wave. So I'm taking the length of the start of the 1 through the 3, looking for a reaction potentially at the 4, potentially at the 38. So let me get some of this off. Right, so if this is going to come back, if we're going to come back here and then come down, then I've got 5. Now I've got an A wave of my B wave. Right, so it's always about the subdivision. So just like, so here, this good example. Just like this 5 wave here is the 5 wave of an A wave, this 5 wave is the 5 wave of a B wave. So this would be A. Then you'd want 3 into the B down to the C, and you'd want that to be done in 5. All right, so this, here, I'll just move this off here. That's what you're looking for. right? So this would have to get to second target here as it relates. So if this is A, then we may be putting in the A wave here. So this would be of the smaller degree, right? So this would be the A, the B, and the C of the B. So let's put that in green. Okay, so we're looking for 5 of net A. We don't know because we could have a 3-3-5. We could have that. We don't know. We've got to see what this reaction is like here. Do we get a 4-5? Don't know. We don't know if we get that, but it's set up for it. It is set up for it. So this 4, this could go to the 50 easily, taking the length of this. Let's get it right up. Where am I on there? Yeah, there it is. It's my hot box that's off. All right, just tidying that up. So if this goes A wave, A, B, C into the B wave, now we've got a contender for the C of the B that sets this up. So A of 5, 5 of A. Potentially 5 of A, 3 of B, 5 of C. We'd have a zigzag. We'd have a 5-3-5 within the B wave, correcting this 5. Do you follow that? So we go back to the basics of Elliott theory, 5s and 3s, right? So 3s correct 5s, but within those 3s, there are often 5s and 3s. So if this comes down here, and if this comes down and we get this push to give it a 5. So we've got 5. This 3 is correcting this 5. Do you follow that? Right? So 5-3-5. Then we've got an A wave followed by a B wave. Now we're looking for 5 in the C wave. So this now we're anticipating it would do this. 5. Right? 5-3-5 into the B. 5, which would give us on the largest degree, 5-3-5. So I know that's a little confusing if you've not been through basic Elliott wave trading. That's one of the reasons that we do it, and we train you and we test you. We don't just throw you in with a video like this and say, good luck, man, I hope you figure it out. No, we're going to test you through this whole process so that you get it. So not only you have to be able to do it under pressure. So we don't just give you a test and say, good luck with it, let us know how you do. No, we're going to time you, we're going to test you, we're going to fail you if you fail, rather than just say, oh, well, he's a member, right? So we don't want to upset him. No, we're going to fail because what value do we offer to you if we're just making it easy for you? These tests that we put you through in our black belt testing, in our belt testing system, which we borrowed from the martial arts, these are not easy. And they get progressively harder. So to make a black belt within Trade Devils University, you're on your way to being a professional trader. These are not easy tests because we're going to force you to learn this stuff so you can do this. You don't have to think about it like you might be watching this going, oh fuck, man, this looks way too complicated. It's like anything, it's complicated at first, but once you work through it and study it and get some screen time, come to examples like this, work it out yourself. Once you start identifying it, you're going to have massive aha moments. Right? That doesn't mean that every trade's a winner. That's the absolute opposite of what I'm saying. I'm just saying this is a way to organize the chaos. That's all it is. Otherwise, shit, who knows where it's going? You might as well flip a coin. Heads, I buy it. Tails, I sell it. I mean, it really comes down to that. So then we look at this and say, well, okay, wait a minute. All of this suggests that if it's going up there, I'd be correcting this larger degree 5. Right, and we know this is a likely target here. So with this 5 down, looking for this A, B, C, it's a process of trying to put together the roadmap. That's all we're trying to do. Can we build a roadmap that would make sense based on what we're seeing? All right, so here's an 8-hour chart. Right, this is about what I would use for trading this. No reason to go down to that detail. Maybe if I'm trying to dig out, did we get it? What was the spread like? Did we turn on a pit? What did the algos do? What's the last pivot? But here's what's important to this trade. If we're going here, right, that this holds, because this way, if we're buyers here at this 50 or at the golden zone, we know we have an algo behind us driving for this target, this green line. This algo down here is driving for that target. And then we can put the whole thing together and say, well, would that make sense? This is 5 down. This is 5 up. This would be 3 down. We're pushing for 5 up to get to that target. We're behind an algo. Yes, we're going to have to get through the algo on the way back, right? So remember, there's always an algo on the other side. So yes, we will as we go back up, we will have to get through the algorithms here. So if this were to come down here and pivot here, this is going to have to get through this 50 and this 618. But eventually, eventually it breaks, right? So one of them breaks. Bulls or bears win, right? So eventually there's always a winner on some time frame. So if this breaks here, then these guys lose. So then you say, oh, poor algorithm, lost. What's it going to do? So if it comes up here, if this comes up and they start selling it here, they've got this as the target. They get here, they break here. Oh, poor algo, lost. Oh, poor algo. What are they going to do next? Well, all they're going to do is take the next 50 coming down, looking for that. So then you've got them on side. That's why this is a place to add. Right? Do you follow me? So if we go from here to here, they get stopped out. They're just going to take the next 50. And eventually, they always get it. They always get on the right side of it. That's why they can keep doing it. They don't care. Loser, 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 don't care. Eventually, they're going to get on one of the right side of it, and you're going to get one of these massive moves. Right? They can afford to just take every one. And again, it's not the same people. That's not what I'm suggesting. It's not the same people with the same algorithm going, well, I've got one of my algos as a buyer, one's a seller. That's not what I'm saying. We don't know who's behind it. All we know is that this is an algorithm that we can identify. We can spot it, track it, mark it. We know where we're expecting a reaction. That's all I'm saying. All right, shit, man, 36 minutes. I went kind of long there. I really didn't mean to do that, but there's so much good material to learn here. There's so many things that I'm trying to drill it into your head so you get the idea here. So I will say this: you have to want to learn this. You can't just watch a few videos on YouTube and go, I got it, 5s and 3s. No, it's a little more complexity to it than that, which is it's the whole basis of our business is that we can teach it to you, right? So if you want to learn this and you really want to get fluid and comfortable with it, well, you might give us a visit over at TradeDevils.com. We can help you with that. All right, guys, I went long there. I've got one more to do. Be back to you in a